Good evening to one and all. This is Commerce Friendly YouTube channel, and this session we are going to understand the concept of profit prior to incorporation. After going to this chapter, we have to understand why we study corporate accounting. Everything has its purpose. For example, why we eat food? We eat food for the purpose of hungry. Like that, corporate accounting has also its purpose. What's its purpose? Through the corporate accounting, the students get the awareness of corporate accounts and the provisions of Companies Act. Means they get the idea about provisions of Companies Act 2013, and they get the awareness of corporate accounts. So I think you all understand the purpose of corporate accounting. Let's start our session. Profit prior to incorporation. Okay, what is profit? What is profit? Profit means total income minus total expenses. Right, it's profit. Prior. Prior means what? Prior means a pre or before. Means it's a pre, means it's before to incorporation. Incorporation means when the company receives the certificate of incorporation, then we say the company has incorporated. It's called incorporation. Profit prior to incorporation means in this chapter we have to calculate the profit of before the incorporation period. This is called profit prior to incorporation. In this lesson, you will score 22 marks. Okay, 14 marks one question, 6 marks one question, and 2 marks one question will be arise in your exams. Okay, we have to understand this concept broadly. For example, there is a XYZ company. There is what? There is a XYZ company. And ABC company took over this XYZ company. Means ABC company purchase purchases the company of XYZ company. ABC company purchased the XYZ company. This is called took over of business, took over of company. Okay, let me understand this. For example, this ABC company has purchased the XYZ company on 1st April. Means it purchased the company on 1st April. So this date will be called as date of acquisition or date of purchase. And if they purchase, the company has not able to start their business because according to Indian Companies Act 2013, the company should receive the certificate of incorporation to start up the business. Okay, and for example, this ABC company on 1st August received the certificate of incorporation. Means this ABC company received the certificate of incorporation on 1st August. So this date will be called as certificate of commencement date. And laterly on 31st March, the ABC company prepared its final accounts. So this date will called as date of final accounts. Okay, hope you are understand this. On 1st April to 1st August, 1st April to 1st August means date of purchase. Date of purchase to date of incorporation. This period is called as an pre-incorporation period. What? Pre-incorporation period. And from incorporation to up to the date of final accounts, from incorporation to final accounts, this period is called as an post incorporation period. Hope you understand this. So this is pre-incorporation period and this is post-incorporation period. In this chapter, you have some treatments. First treatment is profit. How you treat profit in your problems. For example, If there is a profit in pre-incorporation period, then the profit will be transferred to capital reserve. If the loss in pre-incorporation period, then it will be transferred to goodwill account. Then it will transfer to a goodwill account. If in case of profit, it will transfer to capital reserve. If it is a loss, then it will be transferred to goodwill. It is an important thing. We have to understand this. Okay, if in case of post incorporation period, if there is a profit or loss, anything it will be arise. If it's a profit or loss, we have to transfer this to profit and loss appropriation account. Profit and loss appropriation account.